Greetings, I'm Tom Bengtson. I'm publisher of BankBeat magazine, and I'm with Sam Wilmes, who is the digital editor of our website, banknews.com. Sam, give us an insight into some of the things going on in banking this week.
So this week, Landmark Credit Union announced its second acquisition in a week. This one was for a branch of North Shore Bank. Last week, they announced that they were acquiring American National Bank Fox Cities in Appleton, Wisconsin. This comes on the heels ICBA Live in San Diego. The ICBA rolled out a campaign saying that it's an illusion. Credit unions are deceiving the public and saying that they are community-focused champions. Instead, they are taking off the market tax-paying banks to grow larger and grow beyond their mission.
And of course, this is an issue that affects all citizens, because if you take businesses off the tax rolls, that puts pressure on our economy. The country is already running at a record deficit, so if you take businesses that were paying tax and then you bring them into the nonprofit arena, that's a serious public policy issue. So that's what ICBA is getting at, and I think it's wise of them to focus a spotlight on this issue. And of course, the credit union involved here is a very large institution, is it not?
$7 billion,
Right.
Yep. North Shore Bank is $2 billion.
So there we've got a multi-billion-dollar financial institution operating without any obligation to pay income taxes. So you can see why that might upset some people. Well, what else have you been following this week?
This week, President Trump issued an executive order looking to ease mortgage regulations to enable more community banks to participate. That's been a challenge ever since Dodd-Frank passed, not only with the increased regulations, but with the advent of digital mortgage lending. That's put, unfortunately, many community banks can no longer do mortgage lending because of those two factors. So it'll be interesting to see how this plays out.
Right. So it has been interesting to see that after the financial crash of '08, there was the new rules and new laws passed and put into place, which essentially has driven the community banking industry out of the mortgage business, or substantially reduced their role in it. And then, of course, that difference gets made up by what I think of as the shadow banking industry. In other words, financial institutions that are not under the same regulation and supervision that the community banks are under. So this is actually kind of dangerous for consumers. When everything is thoroughly regulated, consumers can feel pretty safe dealing with those financial institutions. Institutions that are less regulated, the consumer has to be a little bit more wary. So it's good to see that the administration understands this issue and is focused on it. And so I think that's a good sign for banks and for the industry and for consumers. One thing I wanted to follow up on and we mentioned it in our last video, is that the president is pushing this 10% cap on interest rates for credit cards, which very populist idea. A lot of people like that idea, but we know if you study economics at all, that whenever you artificially cap the pricing on something, you're going to get less of it. So clearly, if this were to happen, you might have lower interest rates, but you'll also find it an awful lot harder to get a credit card or to get loans from credit cards. So the availability of credit is a pretty important thing, and the market kind of sets those prices now. And I really think that if we want to make credit available, we need to let the market set those prices. Sam, what else have we got in terms of news from this week?
That about covers it for me this week.
All right. Well, thank you very much for being with us. We'll catch you next time.